let's start
Yes,
your wonderful
let's start.
presentation. Thank you so much for being here. Love it. Peter, right?
Peter, yes.
Lovely meeting you. Oksana, thank you for coming back.
Thank you for
And ladies and gents, please take as much as you can.
And thank you for being here on a Monday morning
Yeah.
to listen on the wonderful subject of mortgages.
Yeah, that's it. Hi, my name is Oksana. Many of you might know me through decluttering and staging services. That's a company I built, I own, and I'm very proud of. But today I would like to introduce myself as a mortgage agent. And I'm here with Peter Pellegrini. We both work with mortgage outlet brokerage. You might know that any licensed mortgage agent has to work with a brokerage. We cannot freelance too much, same as real estate agent. The presentation, we believe, is short because we didn't want to abuse your hospitality and kindness and didn't want to waste our time and your time and keep us away from the client. So we will make introduction, then go through the presentation, and please ask questions publicly, privately. Some people don't want to disclose. Whatever comfortable for you, we will try to answer all of them to the best of our capacity. If more research is needed, we will do it and answer later. So Peter, unlike me, he works with a mortgage brokerage with me together, but he has 30 years of experience with banks. And he's my colleague, and he's my sales manager. So he helps me and mentors me, and everybody, it doesn't matter how smart you are, everybody needs a mentor, right?
That's right, 100%.
No, I feel that.
So Peter.
Yeah, so just real quick, and then because Oksana's the star of the show today. So, yeah, I'm 30 years in the business, 30 plus years. I hate saying that, but it is what it is, right? I've spent a lot of times in actually working with realtors in realtor offices. I've managed teams up to 42 people. This whole environment is not new. I guess I have my own little brokerage within our mortgage outlet group, and Oksana's an important part of our team. So today, what we want to do today is really just let you know how we can help your clients get mortgages. Because the minute they get mortgages, especially in today's mortgage market, a lot has changed, and Oksana's going to touch on a lot of those factors that have changing. You'll hear qualifying rate, stress test. It's really impacted the market significantly. Where a year ago or 2 years ago, I mean, if you had a pulse, you were getting a mortgage. Now you need a pulse plus. And so we want to demystify some of the maybe crap you're hearing out there, for lack of a better word, I guess. And then, and really manage it by fact and really what the market looks like today. So, is that a good segue for you, Oksana? To start.
So this is the topic. What is important to know, and in order to close the deal, because if you don't close the deal, you don't get paid. You cannot move to the next client. So how to make it happen? Just to remind you, you all had to learn about that in order to get your license. But those are main criteria of mortgage approval. Just to refresh your memory, the income, down payment, GDS-TDS ratio, credit score, and common mortgage purposes, refinance or purpose. Just basics to remember. So where and why potential client feels they are ready to purchase or call you. It's mainly motivated by life events. They got married, they think about buying their first property, growing family, they have kids, they need bigger, more space, declining family, they retired, they don't need such a big house, or they cannot climb the stairs anymore, downsizing, investment properties, or vacation properties. Those are types of clients probably you're working with.
Can I just add a little bit to that? what's important here is that with each of these life events, as you work with your clients, what's important, again, in today's mortgage market, is that the clients have a financial assessment of where they are and where they want to be and how they get there. It's really important today that your clients, whether they're buying their first home, whether they're moving up, buying down, or refinancing, whatever the case may be, that it's more important today than ever that they sit in front of a mortgage professional and really do a financial assessment. It's no different than going to your doctor for a physical every year, right? You want to see what shape you're in, and then depending on the results, that's, you know, where you go from there. So, and I won't get too far ahead of it, but really important that your clients, before they go and do anything, even if they already own, or whether they, they're interested in getting into, rentals or whatever, that, again, I can't stress it enough just today, because of qualifying rates with banks and other lenders, you need to be ahead of it as opposed to reactionary to it.
Yes, for sure. So what they do not know or just didn't think about and not mentioned in mortgage calculator. Mortgage calculator is a separate topic I really want to touch. So the client does not know that their GDS, TDS does matter. There's a ratio that is changing. Today, the ratio is 39-44. If they're not fitting into that ratio, they're not going to be approved by the bank. If something, I don't know, 40, 50, 60, they are not fitting. And we have to work with them and see how we can work within the ratio or change the ratio or maybe move them somewhere else. Credit score will affect a deal or qualification. People can have a credit score from 500 to 900. And trust me, different credit score will affect your application, as well as interest, as well as where we are placing. So people don't know about that. We usually check credit score when application is done, documents submitted, we know where we will go into place. And then if your client, my client, is forgettable, and they didn't mention, or for whatever, the second mortgage they have somewhere, or child support, or the car they just bought and they're financing, then after I click that mortgage score, I will see that all. And then the file we built will not work. We have to change it. So there is nothing that could be really hidden. As Peter said, I'm like a doctor. I really have to know everything before I know how I can help you. Right, this is it. Okay. Qualification of salaried and self-employed clients are different criteria. As self-employed person, we depend on profits, and we have fixed or unpredictable expenses, right? So the amount we show to the government in order not to overpay taxes would be little. The gross income, let's say if it's 100,000 and the net would be 36, guess what? You will be qualified at the bank on 36. They will not consider your gross. But not to run ahead, but also just to mention that's not the end of the world. Between this and that lender, there's plenty of others, and we know and we work and we build relationship with lenders who will work with your self-employed client based on their gross income.
Can I just make, do you guys work with many business for self type clients? Right, because that's the client that's been impacted the most with the new stress test and qualifying rate.
We ourselves are self-employed.
You are, so you know line 150 on your income tax return? That's what everything comes down to now. Where before there was a lot of gray area, that gray area doesn't exist anymore.
So sorry about that.
Yeah.
But there is a way of getting around with like,
Yes, there is a way of getting around
Depends
because
on the lender. I
depends
guess?
on the lender. There are lenders who are more willing to work with a gross income self-employed client because they know how do you treat your business. Your mortgage will be your business. You will be paying off your mortgage, and they know you don't want to overpay on taxes. And they are willing to work. You still have to bring like a business ownership documents and bank deposits that you're not working in the States, but here in Toronto. But there are lenders who will consider and work with us.
Some of the lenders will look at, you know how you have your add backs, right? So some people are self-employed, but their vehicle is paid by the company, for example.
Yeah.
Some lenders will put that into, will understand that and put that into their factor in making their decisions. That's just one
Will
example.
there be
Yeah.
a drastic interest rate difference?
Not necessarily.
Yes, that's right.
Not necessarily. You have to look at the whole package, not necessarily.
The market is too competitive for someone to try to gouge anyone. It doesn't happen anymore.
Please keep in mind and remember, there is not bank and private lender. People, when they hear you're not qualified under bank, they think that's it, I'm screwed. And I cannot afford private. There are so much A, B lenders in between. You just don't be afraid to ask, to talk, to work with us, and then you will decide. By the end, you decide, client decides. They sign the application. Without that, you cannot go through. So there's nothing to be afraid of.
Just to
Yes.
tie a bow on that point, when we've completed our financial assessment of the client, and then we go and try to meet the right mortgage for that applicant, if they don't meet the criteria of an A bank or a B bank, we do have alternatives. We never say no to a client. What we say is, we can get your mortgage done, but based on your circumstance and your financial assessment, this is what the market can do for you. So we never say no to your client. What we say is, this is the way we can do it. Everybody wants to go to an A bank and get the A rate. That world just doesn't exist as,
For everybody.
yeah,
Exactly.
or like it used to. There was a lot of B people that were playing in the A world that no longer can do that.
There is many lenders that have two lines. They have A line for a client who qualify and B at the same lender. So just see where do you fit.
And not a big difference in rating.
No, just don't worry about that whatsoever. So the next one, rental income. You know, some client, you might have them, they already have a property, investment property, they collect income. And I think, okay, my income of 150 is little, but my rental income can be added, and I make so much more. So just to let you know, the bank will take only 50% of rental income. Doesn't matter what you declare, doesn't matter how much do you make, the bank will take only up to 50. Some lenders will take up to 70, we can work with that, but just let your client know that whatever is in their imagination might not be real, so we have to talk first. And stress test or qualifying rate of 534 is real. It was introduced to us last year, and I will stop a little bit later to explain how it affects you, but it's real, and everybody, AB lender, doesn't matter, will be qualified under that stress test first, before you get any interest for your mortgage.
Okay, so if you can be more clear on that.
I will. I have a special slide with numbers to
With the
show
stress
you
test?
how and what is the difference. And another one that is my favorite, shopping online for a rate is not the same as being qualified for that rate.
Yeah, so just on that, because what you'll find clients, and I'm sure even when they're shopping for a real estate agent, everybody's on the internet now. Everybody seems
A little bit, yeah.
that their ability to go on the internet means they equate it with knowledge of either real estate or mortgages. So the point here is more that they can complete these calculators online, and it will give them some direction, but it's not an approval. And there's a difference, especially for you guys when you're making offers, right? You want to make sure you have a solid approval in play, as opposed to, a bird in the bush kind of thing.
And let's say about approval,
Yeah.
like how fast can it be done?
From the moment all documents are collected, it also depends how fast the client can bring. Some people just don't remember where is a notice of assessment.
Pre-approval.
But after the moment we get it, I think from 2 to 5 days we will have everything done, depends
But
on the
not
length.
pre-approval, that will, pre-approval is different, like let's say, go ahead.
I was gonna say, it is different from the concept, but we treat a pre-approval as if they're applying for the mortgage. That way, we bring those two steps together, and that way, we ask for all the same documentation during the pre-approval process. That way, when we give the pre-approval, it's a done deal. So
Ready to go, you just.
you know
have a
exactly
package
what
to
they
go.
qualify for, you know what what type of home or what price range to go in and start shopping in. So there's no surprises.
And the applicability is 90 days for that? What's the time?
From 90
Yes.
to 120, different lenders has different days, but also when you are approved, you have you have a letter of commitment from the lender. When you are approved, you have a shorter term to sign and give back to them and give them a chance to collect all the documents. So
Yeah. Better to work with the 90-day ratio because that helps you too. Because sometimes clients,
Yeah,
you tell them they have 180 days, they take 180 days.
sure,
And
yeah.
yeah.
so
yeah,
it's,
yeah,
it's 90 days is a good gauge.
yeah. When you want your guests to be on time, ask them to come 10 minutes early. Okay, online mortgage calculator. And I played a little bit with Keller Williams website online, and I do understand you have to have it. It gives the client idea what to expect, learn about those special wording there, but I think a little bit it's like should be illegal because it gives client wrong ideas about their capability and payability. I don't know how to say it, and I will tell you why. So when you're on mortgage calculator, you can check right now. You have a computer. You look like a smart man with an Apple.
No.
So they will ask. They will ask you for the first property price. Okay, how much does it cost? Dream, you put it. Down payment you're willing to pay, the percentage. And then they ask you to choose the rate. I love it. You can choose your rate from 275 on that website to 295. And I'm thinking, who the hell will choose 295 if you have 275? So everybody's going to the lower one. And then terms and amortization period, like whatever fixed, variable, 25 years amortization. What the mortgage calculator do not ask you, and what is important for mortgage application, your income. Nobody asks how much do you make. Income for the last 2 years, it's crucial. And they will ask you notice of assessment for the last 2 years, and we will work on average. Credit score, it will affect your qualification and affect your interest. Sources of down payment. Having down payment, it's not enough. We have to clarify where it's coming from, bank account, investment statement, and how long it had been in Canada. It cannot be in Canada less than 90 days. I had a client who got approved, pre-approved. They said, we're going for vacation to Ukraine, but we're coming back with a suitcase of cash from our parents. It's not gonna work. It's not gonna work. Nobody will take it.
I want to go to Ukraine and get a suitcase.
Yeah, me too. Another people got approved. They were from Saudi Arabia. They get money in the bank account for 30 days. Not gonna work. It has to be 90 days. Since we're on down payment, another source of down payment is gift, like from your parents, closest family. So the gift letter should be filled up with contacts, and the lender, any lender, will call them and ask, do you know such a, are you parents? Are you giving them money? Whatever, they will. So one funny story that I had, everything done, letter was prepared, and the lender calls, and are you parents? Yes. Are you giving down payment? Yes, they're buying a house, so they're really okay, we want to help them. And they promised to pay us back within 5 years. Guess what? It's not a gift anymore. Done. Down payment is not accepted. Has to be a gift. Or train your parents what to say. Assets and liability. Do you have any other property? Do you have mortgages? Do you have car financial? That will be also very important. That's not asked in mortgage calculator, unfortunately. I guess, again, GDS, TDS, and qualifying rate or stress test of 534. What you can choose, and it goes with the choosing profile, you can choose terms, fixed or variable you want to do, and frequency of payment.
Just around the qualifying rate, just to be clear, you probably already know this, but sometimes things are just better said. So right now, let's say a 5-year fix is 3.39%, okay? You have to qualify on that rate, not the 3.39. That impacts this dramatically. So that's just to give you an example how the impact is on the approval
It was
process.
introduced recently, so I will give you like calculation how that you can get an idea. All the numbers are just made up, it's not a real person. So let's say monthly income $5,800 before taxes. Property tax $200, so monthly, hydro bills and amortization 25 years. So mortgage rate, it's a prime rate today, 3.95. A year ago, this client will be qualified for $385,800 mortgage amount. Today, he will be, because this is qualifying rate, he will be qualified for $340,000. Do you see the difference? This is the mortgage amount he will get, even though if his rate is this or lower or doesn't matter, but they will not give him more than this. So they have to know that their ability is a little bit different today than a year ago. So if they listen to their neighbor, family member, mechanic that knows everything, bartender who is very supportive all the time, and the story is, oh, forget it, I got this and that for nothing, I meant that, I didn't show that, it's not gonna work this big. Because everything is different, rules are different, stories are different.
So even the private lender will buy a test?
No, private.
No,
lender-
so
private
there was
lender.
it was in the news recently where the government was looking at private lending, because that business is growing rapidly. It's $1 billion business right now, because what's happening now is there's two parts to it. There's the person who borrows from the private lender,
Yeah.
and then there's the private lender who now is really an investor, right?
That's right.
So I try to make this brief. From the investor's perspective, they're probably tapped out because you can only have 5 rental properties now. No bank will finance that 6th one. So now that lender, that private lender is becoming the mortgagor as opposed to buying the property and being a landlord. A lot of the business for self people, they're walking into all 5 banks and all 5 banks are saying no can do. So they're kind of in a position, there's still a good risk, right? And what we're finding is the private lenders, the rates aren't as bad as you think. Like lenders are out there probably 5.99, 6.99, which is not bad considering not getting the mortgage at all.
So the 599 is a private lender or
Sorry?
second, like a B
Yes,
lender?
first mortgage.
There's a
private
B
lender,
lender,
yes.
then there's a private lender.
Plus a couple points on.
No,
It's
no,
a 599.
there's a lender,
B
lawyer
lenders are-
fees,
Right.
B lenders are now pricing, because pricing has to do with risk, right? So you can be you can have A qualifications and still get a better rate in a B with a B lender. Like that's how competitive it is now. Just right now, the A lenders, because of the qualifying rate, where some B lenders,
B as well, yeah.
Yeah.
Some.
right? So there's ways in and around it, but that's why it's important nowadays for your client to sit with a mortgage professional before they actually go out in the market with you. Because your time is money too. You're self-employed. You want to get paid when that deal closes. That deal doesn't close, none of us gets paid, right? So it's really important that we prepare them for you so that as you're taking them out, they make their offer that that deal closes the day it needs to close. Or else we've all worked for,
Or they don't
It's
look
like
at something
any
that's
mar-
goofy, like that's way goofy and way out of their budget, which happens too.
If they're
Yeah.
way of their budget, they can
Yeah.
get that's way of their budget, depends. But we
Yeah.
sit and we help them to figure out what is the best way for them.
Mhm.
We're here to help client and to build up the client, that they're coming back to me, to you, that they want to grow, and we want to grow with them, right? That way, we all are winning. If somebody is winning and another person is losing, it's not a good business.
yeah, just to add a little to it. The one thing I've learned in my 100 years in this business is that when you put the client's needs first and foremost, everything gets done around that. And we're really, the around that is us, right? Making sure they got the right financing, make sure we found them the right home. Because about a year and a half ago, if you remember, that was all those multi-offers, right? 20 offers on every deal, right? So from the mortgage perspective, right, everybody was overpaying because they had to or they wouldn't get the house. What do you think the appraisal was coming back in at,
70%?
right? So what do you think that did to the financing?
Blew it out.
So not only were they qualified on that one, then the appraiser came in and gave us another little nudge and said, and they had to go out and get more down payment.
It
Yeah.
happened to one of my clients,
Yeah,
one
it
of the, like, buyers of a listing
Yeah.
that I had, they were, like, the appraiser came in
They're
and was like,
mortified,
Yeah.
yeah.
And
And
convince
you
a bank that, like a lot of banks, they put a lot of emphasis on that appraisal,
sure.
right?
Yeah.
Where I think where you'll see more with Bs and private, they're a little bit more,
Flexible?
yeah, they manage more in the gray because they understand the reality of the market too, right? So,
Okay, you know what, it gives me a good idea, maybe in the future we can touch, but not today, like B mortgages, private mortgages, appraisal part, that we can talk about that. Now I'm afraid we will be slapped on the wrist, but just not. Stay focused.
Oh,
No, it's all
sorry.
good, this is all good. I'm
Yes.
glad we're
oh,
here.
sorry.
Yeah,
No, I don't know, but
I
I don't
tend
know
to-
the timing
I
and
tend
everything,
to-
but it's a
This is
good,
all-
And they're
good
recording
idea,
it too,
so it's your fault.
We can't even lie.
It's all great, thank you. Just before, because I heard the word appraiser,
Yes,
like even for line of credit, the bank would send an appraiser.
yes,
Or the lender.
There's an appraiser
Yes.
all the
All
time.
the
Yes.
time,
because they wanna know what the property is worth,
of
right?
course. Yeah.
Because anybody lends you money under your income and price of the property, right? Even the bank, if you cannot pay, they will take your property. You have to know that there are risk in there.
But in your earlier example, if the house is free and clear,
Yes.
and even, although they're on pension
Probably a long
income,
time ago,
right?
yeah,
There's
so
some good pension incomes out there.
There's equity.
that we should
Right.
really
So
today.
they'll work the line of credit based on their income. So they're gonna get something. It just
And
depends
part of the problem-
on the magnitude of the renovation as well. Like
Yeah.
if they're gutting it out and rebuilding it, then
Yeah.
No,
could be
not
tight,
rebuilding,
right?
but appraisal is involved 99%.
Okay.
100.
Okay, benefits of being pre-approved to you and to your clients, because we are all in the same boat. Client have time to collect all the documents required, and trust me, it's a very emotional and stressful time. They're like gasping, they're looking for property, they're checking their money and down payment and parents and sometimes kids, and then they have to collect documents. They know it is somewhere, but you have to get a job letter and bank statement. It takes time. So they have time. They are not going crazy last moment. They have time also to fix or deal with possible problems, financial, or if they want to buy a car, then maybe it's time to wait a little bit and buy it after you get the mortgage. So we can help them how to do that, not to affect their GDS, DDS. They are ready, and you are ready for multiple offers if needed, because they know their
Wiggle room.
value, exactly. So, and they know their financial conditions, so they can waive them if possible. So whoever is ready, getting the house. Whoever is not ready, they're kind of,
Yeah, so what we try to do with the pre-approval, I made the point earlier, we try to get it as close as it being an actual mortgage approval. That way, as you, especially now, supply is kind of low now, so if you're going into an offer situation, there's probably gonna be more than one offer there, right? The more firm you can go in, right, your client's gonna stand out, right? And that's where we wanna help you guys. Like, we can do all the right things with the mortgage, but if we don't set you up for success when you present your offer, then if you don't get the deal, we don't get the mortgage, right?
They don't have a house.
So we're an extension of your business from that perspective, right? So we're always trying to set you guys up for success, right? And
I'm afraid none of us mentioned, maybe we did, that the brokerage we work with up to 18 lenders. TD Bank, Scotia is included as well. So we have 18 doors to choose
Yeah, right
from.
there.
18 options, yeah, but 18 didn't fit, so I couldn't make it big. So if we do not find, or your client will not match this lender, that it will match that. If not TD, maybe Scotia has something special today. If not Scotia, maybe Manulife has something special today. So it's very flexible. And as I said before, we check credit score just once, and we can go with that application to many lenders. If client decides to go by himself to every door, his credit score checked every time. He does not have objective information from every lender, because any lender try to sell the product they have. They cannot sell you what they don't have. So they will do everything to convince you that this is the best for you. They don't have anything else. For us, we can go from one to another and find the best for you, because we are working for a client. We are not working for one bank. It's a big thing. So, before you ask your client, you know, you're meeting your client, you're asking, where do you want to live? What location you're looking for? Ask them if they talked to the mortgage specialist yet. Or it would be just next question. Did you talk to your mortgage specialist after they mentioned Kingsway or Etobicoke South? Because you know, location is your expertise. If you know what they can afford, you will take them there. You will show the best houses. You will find the best home for them. But you don't have to schlep all over all Etobicoke just for nothing. Mortgage approval,
sorry, go ahead.
is our expertise. After I learned about your client's situation, and I know how to build their case and where to place their case in order to get approved, we will make it happen. Because when client is happy, you are happy, we are happy, we can move to another client. And
The only point I would make here is it's really important for you to understand who your client is dealing with for their mortgage. And the reason that is and this works for us too. We like to know who the agent attached to the deal is as well. And I'll tell you why we can help each other here. When you're meeting with your client, you say to your client, have you been pre-approved for a mortgage? Yes, I have. Now, we don't know whether it's a firm approval or whether it was a calculator. We don't know. And they can say, you know what, I deal with, you know, TD Bank, right? Or RBC or whatever. And so the minute your client goes into the bank, you know what all these banks have? They have mortgage specialists, right? That have relationships with real estate agents. So when they go in and meet with that mortgage specialist and they're pre-approving that client, right? And I know this because I worked in the banks for 30 years, right? They start to steer that client towards their agent, and you have no control over that. So that's where putting your client in front of someone like Oksana, you now know she has your best interest in mind, and it's about ensuring and being an extension of your business and saying, you know what, not only is this the right mortgage for you, you've also made the right choice in the real estate agent you're dealing with. Because there's mortgage people out there that will try to take that deal and move it to their agent. And vice versa on our side, if we don't know who the real estate agent is attached to the deal, right, then we run the risk of them moving that client to their mortgage person, right? So that's why it's really important to build partnerships and be an extension of each other's businesses and build that trust factor, because that's, you guys know the game. It's very competitive out there. And in our business, like your business, there's good agents and not so good agents. And there's ones that, you know, they toe that fine line between good and evil, right? So it's important, right? That's why it's important. By putting your client in front of Oksana, you know that client is not only going to get the right deal that best suits their circumstance, but you know she's going to reinforce the fact that they're doing business with you guys. So that's an important point.
And as Peter said, it's good to work with people you trust, build a relationship, and you can call anytime, you know. Whatever, any questions about the property, any questions about the mortgage, it's so helpful be able to call and you know it will be answered. I guess with time you will have your lawyers you can call, anybody you can call and ask it after 9 p.m. and 6 p.m. and know that it will be taken. Try to call big institution, you know, many people in there and every different person on the phone. Whoever said yes today, tomorrow, other person may said not really. Right? So no accountability for that. So I guess we are done. I hope we didn't bore you to death.
That's great.
And any questions, please? There's no stupid questions. First of all, there is no stupid questions. Don't be afraid or anything to ask whatever you don't understand.
Good.
Well, we've got your contact information.
Yes.
If it does come
If
up,
you need
you can
anything,
reach
or
out.
example, or advice even, you know,
Sure.
it's good when you have a quiet client, and client would say, oh, you know, but I work with my bank, right? So it's okay, let them work with the bank, but maybe you want to consult somebody else. I have a person who can give you some advice, or, you know, give different options, and you go with whoever you want. You are in charge, but don't be afraid that you have, like they said, I already have somebody and you cannot change it. You don't have to change it. You just give them more options.
Second opinion.
Yeah, second,
We-
it's always important.
We try to work, the way our team is built, we have a lot of resources behind us, okay? There's a lot of experience, but the one thing that I know for sure in building a relationship with agents is the fact that we have to be able to help each other's businesses. Not only from the approval process to ensuring that the client gets in the right home, right with the right mortgage, but also from a referral perspective. We're always looking for opportunities for agents as well. So when we get, there's times we get buyers in front of us and they haven't contacted a real estate agent and they're looking for a referral as well. So this is not just about you giving us your clients. We're always looking for clients for our realtor, but like you guys, like us, right? You invest in the people that are investing in you, right? So that's really.
Another thing, just an example, I had a phone call from a real estate agent. He was on the way to the meeting with the client, and it made him look better because he was asking, you know what, they have, the deal didn't go through, they need a private, like, bridge mortgage, so give me some information. If I meet them, I will tell, I know something, right, it will be this or that. So it's another thing that you can learn on the way to your meeting and look a little bit more knowledgeable about that topic. So it's also good. Or I am going crazy and say, listen, I call you, please help me, I have a house in the Etobicoke, such and such street. We don't want to pay for appraisal yet. Do you know roughly idea how much the property might cost there? And you can help me, right? And I can be more knowledgeable with my client before we pay and order appraisal. So those are things that are helpful to our client and to all of us.
That's it. That's all we got.
And I know it's hard to tell, but English is not my first language.
No, it's great. You did great.
No, very much.
I have a question.
Yes.
Does the second mortgage affect the credit score, or how it works? Like, how
Does
it
the
impacts
second
the
mortgage-
credibility of a?
It doesn't affect a credit score, no.
No.
See, the way the credits, I'll just talk a little bit about the credit score and then
Yeah.
I'll move into
Yeah.
your question. The credit score just determines your ability to pay back debt. and your
How you're
experience.
paying, whatever you're
It's just a resume. This is all the debt I've incurred in my life, right? And this is how I managed it. And it gives you a score based on that, right? It doesn't matter whether you're leveraged 90% on your property or 10% on your property. It's your ability to pay back money.
Yeah.
And
Well,
the other thing to look at is more your revolving credit, your credit lines and your credit cards. Are you paying them in full monthly? Are you just making minimum payments?
Or you're not paying at all, you
Yeah,
know.
it just speaks to your ability and your experience on how you manage debt.
Your financial health, let's say, right? It's out there.
Second mortgages, that's a bigger game today. Before they used to combine them all. With second mortgages, a lot of that is done in the B world and with private lenders. Again, the rates are very competitive in that area, especially with the private lender. If the private lender is, let's say the second mortgage and you're still within 75% or 65% of financing, you'll still get those 599s or 699s out there, because look at it from the lender's perspective, the private lender's perspective. Where are they going to go get that rate of return today? The banks aren't giving it. They put the money in the bank where they get 2%, right? Have you seen what the stock market's been doing lately? Right? So if you think about it as a private lender, it's almost like a GIC, because you're lending the money, but if that person doesn't pay, you're in second position.
Yeah.
And you have more control in the first position, because you can actually bring that to power of sale. So you're always in good shape from from the borrower perspective, right? In today's market, you're not going to be penalized too much on rate. You're still going to be in a good position.
If possible.
Did that answer your question, sir?
Yeah.
If the income and all those ingredients allow us, we can refinance, the first mortgage and get it bigger if it's possible. Sometimes it's not gonna work, so you have to have a second mortgage somewhere. If possible, it's always good to combine and keep with A or B, or sometimes we move client to a B lender for a year to get them better financially, then we switch back to A. For example, I had a client, good, everything is good for properties, good income, rental income, but wife switched to part-time, sick kids hospital, registered nurse, good income, but she switched to part-time because she wanted to do her master. She was doing her master, so her letter of employment doesn't show full-time anymore. She's part-time doing master. So she cannot go to A lender. Nobody will touch it. So we moved them, because of the time to renew the mortgage we had to do, we moved them to B lender for a year. Because she will finish her master, she already did, she will go back to full-time, and then after a year we go back to, because the whole picture is bigger, right? So there's no cookie cuts, right? There are certain rules, like income, GDS, CDS card, but it's lots of flexibility in that. And this is what we're trying to do.
It's the art within the science.
Work within,
Right.
and try to, because I really want your client to get mortgage. I really do. And I will do my best to do that. You really want your clients to get mortgage. And they really want to get mortgage. So if we all work together, knocking just one door and let me do all other doors, I think it works. It works for all of us. Thank you very much for your time.
This is the part where you stand, you applaud
Yes, yes.
endlessly.
Yes,